can't feel it's my time, think it's my year, yeah.
Good morning, everybody. Happy Friday. Welcome to the morning show here on Stock Market TV. It's the best morning show in finance. I am Spencer Israel. I've got JC Parets and Steve Strazza. The gang is back, everyone. About a week-long hiatus. We had, I was on vacation. Then I went to Michigan. The guys were in California for a conference. So we thought just easier not to do the show. We can all come home and resume our normal lives. So we're back. We're back in the saddle, and man, we have a lot to discuss. Don't forget, today is options expiration. If you forgot for whatever reason, now you know. Let's see. We're talking oil, commodities. We're talking IPOs. We're talking. There's a strike this morning. Did you guys know that? There's like an actual strike happening right now. We'll talk about that, I guess. We got a lot of charts to talk about. We missed you guys. Everyone chat. I know you've missed us. We've missed you. We're back. Blake Millard is today's guest. He'll be on in about 20 or so minutes. We'll have Kimmy on after that and Ian Cully on after that. But let's get the show on the road. Let's get these guys on. This is the morning show.
Gentlemen, we are back. Strazza, how you feeling, buddy? Long week.
Doing all right. Getting over a little cold over here still.
Listen, long week, a lot of conversations. My voice is actually back. I was struggling a little bit yesterday to kind of get going. I was exhausted. Let me tell you something. That conference is really impressive for a couple of reasons. First of all, I'll show you. Throw up slide 1 there, Spencer. That was during my panel discussion with Wisdom Tree. And what's hilarious is that Jeremy Schwartz there over on the right, you could tell he reads our work because the alley-oops that this guy was throwing me, Strazza, you were there, right? Like, they were literally straight. I mean, he was just like, JC, why don't you tell us about the relationship between the dollar and stocks? You know, JC, why don't you tell us about seasonality? And I'm like, are you reading? You know, because it's funny. Whenever I get interviewed outside of sort of our, the video content that we put out when I'm on TV and stuff like that, they're not reading what I'm writing. They're just asking me random questions. You can really tell what a huge difference that was. So I thought that was pretty funny.
Sean came up to me after he had to miss it for something. He said, how was it? Was it good what I missed? I said the same thing. I said, if you read our stuff, you've heard it. You've heard most of it before. Jeremy took care of him.
No, it was funny. I even made a joke about it during the panel discussion. I was like, man, this is like not even fair. So anyway, great conference. First of all, it's a lot of financial advisor stuff, which is great if you're a financial advisor. I mean, that's not really for me. There were some presentations that I was interested. Again, not so much technical analysis presentations or current markets, but kind of just different perspective from different business people. So I thought that was really cool. And then, of course, the audience itself that was there, we probably had, I don't know, over 50 members of All-Star Charts. If I had to guess, at least, I would say a couple dozen came up to me and I was talking with them. It was great. And of course, the In-N-Out food truck. Can we talk about this? Not this bullshit cafeteria food that you get at these, stuffy suit wearing conferences in New York City. In-N-Out food truck and taco trucks and all sorts of stuff. And then, of course, hanging out backstage with Method Man and Redman and G-Love. I mean, that was cool. I was hanging out with Big Shot Bob, Spencer, by the way.
That's Robert Ory.
That's Robert Ory, for those who aren't familiar. Obviously, Spencer knows, but for those of you not.
Bob.
And the entire time I was with Method Man, all he could talk about was how cool it was that he just met Big Shot Bob.
Big Shot Bob retired like 20 years ago, I think.
No, but he's the man, though.
What is
7 championships?
I know.
7.
I know.
Did you ask Method Man what he thought about what it was like to perform at a advisor conference?
No, he does it all the time. He did. They performed at Consensus like recently. This is what they do.
So I had my first In-N-Out burger, not at the food truck that you just described, but I had to leave the conference a day early, and Carlo and I were driving back, and because we missed the In-N-Out truck, we stopped at In-N-Out. First time I ever had it.
And
it was excellent. It's a lot better than Five Guys.
It's not that great. It's overrated.
Dude, it's not a gourmet burger. It's a fast food burger, so you have to benchmark it against other fast food burgers. I thought, a lot better than Five Guys. Shake Shack is a little bit different, right? I wouldn't put that on that list, but
I like Five Guys and Shake Shack better than In-N-Out. I think In-N-Out is incredibly overrated.
So here's the thing about Five Guys. The burgers are just too sloppy. It's a whole thing. It's a big mess.
They are greasy, no doubt about
mess.
it. Yeah.
Falling apart. Onions are falling out. With whatever I had at In-N-Out, it was 3 burgers on one burger, and it was fine to eat. It was excellent. I did a triple.
I'm happy for you. I'm happy for you guys. Sounds like you had fun. I was down the shore, and then although I wasn't in Ann Arbor on a Saturday, which is there are a few better places to be than Ann Arbor on a fall Saturday. So shout out to Ann Arbor, great town. Should we get to state of the markets?
Yeah, all right. It's been a while.
Do we just lose JC? I think JC is frozen. JC is so shocked by your In-N-Out take. He's frozen.
Stone face.
He's just he doesn't even know how to process what you just said. Anyway, state of the markets, and then hopefully by that time we'll have JC unfrozen. I don't know. Let's do this.
Peter's right.
Peter's right. Being able, yeah, he's not wrong. Okay, state of the markets.
All right, we lost JC.
All right, JC, how are we doing? We good?
I'm doing fantastic. I'm really good. Just wondering why Californians like In-N-Out Burger. Is it like a home state bias? Is it like how California investors invest more in tech, and Texas investors invest more in oil and gas, and Northeasterners invest more in financials? Is it one of those kind of things where they're like pretending that their burgers are really good, or no?
No, I think they're really good for what they are.
Yeah, the fries are an embarrassment to French fries.
The fries weren't great, but guess what? The Five Guys fries are not that good either.
I haven't had a Five Guys. I'm here like raving about Five Guys. I haven't had a Five Guys in at least a decade. So
I went for the first time in about a decade a few weeks ago. Burger that you don't get out the door without spending about $20. If you're doing a burger and fries, you're over $20 easily. It's like Shake Shack prices.
So what do you say we make some money to pay for these burgers? What do you say, Spencer? You want to hit it?
More money, more burgers.
More money, more.
I just hit it. You were coming back, but I already hit it. So
all right, cool.
We're hit.
Let's talk about how IPOs are back, which is something that we used to do back in the day, Strazza. Companies would issue stock into the public markets. They would raise funds. It was a whole thing. There would be IPOs all the time, right? And Spencer loves IPOs. So this is one for Mr. Israel. Here's ARM Holdings yesterday, $65 billion semiconductor. And we in California, Strazza was like, why is this such a big deal? Why is everybody making such a big deal about it? Did I convince you why it's a big deal?
No, I think Spencer should come on and speak to it. He can kind of describe what this company does and who their clients are.
Semiconductor.
Yeah, listen, there's a lot of $50 billion semiconductor stocks out there. Right. So for me, it's kind of like but not IPOing in this environment, and not backed by SoftBank. That's why they're IPOing, JC.
Well, all right. So they're not important because they're backed by SoftBank. They're important.
SoftBank's keeping 90% interest.
Yes.
Well, the IPO is a big deal because of that, because SoftBank is a story that people like to write about. So that's part of the reason they're making it such a big deal. That was my argument to Strazza.
All right. So basically, these guys make semiconductor components or actual chips for Apple, Visa, all these big companies, that they use for different things. Am I understanding this right?
You are correct. They compete with like Qualcomm, Intel, that ilk, right? And you're right. SoftBank only sold 10% of its stake in this IPO. So they're still, neck deep in this thing. But look, frankly, you don't see what's the $60 billion. You don't see, well, that may have been the IPO valuation. I'm not sure what's that right now, but you don't see that every day, especially in this economy. You just don't see it every day. So
no, I'm pretty sure the economy's never been better. I mean, I'm no economist, but
No,
what's wrong with the economy? Is it unemployment like the lowest
come
ever?
on. That was a joke. Come on.
No, I know. But people actually do believe that the economy is in trouble or something like that. And maybe it will be in the future, but things are pretty fantastic. I mean, you go to this conference in California, it was like $3,000-$4,000 a ticket. This is not a recession. There's 2,500 people there.
I think no, the economy is
No?
economy's good. No, I'm very much with you. All evidence continues to show that the economy's fine. Even housing continues to be resilient. Can we talk about this comment in the chat quick? Did you see the VinFast showroom on Huntington Beach? We lost them again.
Wait, time out. There was a VinFast. Hold on, I'll put the comment up on the chat.
I have pictures.
There was a. This is from Thaba, right? Hold on, VinFast. I if we have pictures, I don't know if they're in the deck or not. We'll get them in there. That thing, I hadn't looked at it in like, I don't know, 2 weeks, but I mean, what did you expect?
Yeah, that's right.
What did you expect with this thing? Come on, it went from what? It went from 11 to 93, and now we round tripped. That's what happens.
Yeah. The market cap loss is about as big as the market cap gains we were all laughing about a few weeks ago.
Yeah.
Right back to where it started, really.
Yeah, right back to where it started. That's what happens. All right.
Anyway.
Wait, JC, do we have a picture of the VinFast showroom?
It's on my phone.
Oh.
No.
Oh, man. What the hell's going on with JC today?
So we're walking Huntington.
No, I'm good.
Okay.
Cool. But can we throw up the? I want to throw up two charts here. The S&P 500 stuck in this range. Go ahead.
Wait.
All right.
Sorry. Go ahead.
Welcome back. We were just talking about the VinFast showroom that we spotted on Huntington Beach.
I wasn't there.
You didn't see it?
No.
It's a big empty room with two cars. The cars look really nice, beautiful. It's not even open for business yet, but they're like getting it ready.
Where was it in Huntington?
Right on the strip, right next to the sushi restaurant, a block down from Paseo, where all those little restaurants are.
Oh yeah, cool.
There's
Vietnamese. Well, let's actually pull some charts here.
Yeah.
What do we got?
Well, I mean, this is really the state. We want to talk about the state of the market. I mean, this is really it. This is the S&P 500 stuck in this range, right? I mean, we've been in this range. This is the type of market environment that's very different from the first half of the year, right? In the first half of the year, volatility was low. Asset prices were trending. The strategies that were working really, really well in the first half just hasn't been the case over the last couple of months. And we've been doing very different things. And those have been working, right? There's a time and a place for everything. And I think messier for longer continues to be the major trend. And I wanted to point out here the sector performance since the new highs list peaked 2 months ago. By the way, when the new highs list peaked 2 months ago, that was the exact same day. It was 2 months ago, Wednesday. It was the exact same day that the US dollar bottomed. Right? That's not a coincidence.
Nope.
Right? The flight to safety into the US dollar has come with stocks under pressure. But notice where the relative strength has been during this period. Energy, obviously, absolutely ripping, in case you hadn't heard. But look at that relative strength out of healthcare and even financials, which is really interesting. And then just real estate continues to struggle. But that relative strength out of healthcare, I think, stands out. That's the second largest component of the S&P 500 and second largest component of the Dow also. Big deal.
Yeah, but are you really interested in healthcare? Why not? If you want to lean on some leadership right now, don't you just go straight to energy and there's plenty there?
It's not so much what I want to do and what I'm leaning on as much as it is when you talk about the S&P 500 stuck in a range and you're wondering how long it's going to be in this range. I think that relative strength out of healthcare, I think that needs to be one of the sectors that leads us out of here. United Healthcare, for example, is 10% of the Dow Jones Industrial Average. It's just one stock, right? And healthcare is the second largest component in the S&P after technology. So it's not like what I want to do and what I want to buy. By the way, there are strong healthcare stocks that are doing very, very well because healthcare is such a diversified group of stocks. So I have no problem leaning into healthcare here. None whatsoever, actually.
All right.
I think it would be important for investors to dive deeper into healthcare because there are so many things going on. And we've got our conference call on Monday for members of All Star Charts, and we're going to be talking about healthcare stocks. We're going to be talking about which ones stand out, and there have been, right? It's not anything new, but at the sector level, those big ones, they get going. S&Ps are going higher. And then the last thing that I want to point out is these two lines. You're looking at credit spreads, and you're looking at the consumer. Consumer discretionaries versus staples making new highs, and credit spreads as tight as they've been all year, to me, doesn't strike me as the type of behavior that would happen right before stocks and the market absolutely collapses. To me, this is further evidence that this is a seasonally weak period in the market, and stocks are acting accordingly. And the resolution should be higher into the end of the year. And we get that at year-end ripper. I guess we'll see. But what this information is suggesting is not that everything's about to collapse and we crash. We could, and these things can certainly start rolling over, but we haven't seen it yet.
I like this because you're seeing the same thing from a risk appetite perspective when you look at the equal weight consumer ratio. However, since stocks peaked in mid-July, high beta, underperforming low vol.
High beta, underperforming low vol. Not by much, though.
No, but the reason I say that is the high beta ratio would typically move with the consumer ratio, right? They're both excellent risk appetite ratios. Seeing them diverge for this long, a little bit different. 2 months now, moving in different directions.
Fine, but the high beta, low volatility ratio is flat over the last 2 months. So it's not like this like rotation into staples and low volatility. We haven't seen that at all.
It's down since mid-July. It's down since mid-July.
The ratio's flat since mid-July, Strazza.
From 128 to 120.
From 128 to 120 when? The new 52-week highs list peaked on... Oh, sorry. You're right. My bad. It is. Listen, when you're right, you're right. When you're right, you're right.
I'm looking at the chart. I'm not lying to you.
My bad. It's not down much. Like it's not down much.
Listen, I would expect to see it making new highs. Is all I'm saying. That's a little bit of split evidence.
Yeah. No, that's fair. That's fair. That's a good point. And then finally the dollar. Go to the dollar one. This is really it, right? So this is the U.S. dollar and the S&P. The day that the dollar bottomed is the day that the new 52-week highs list peaked, right? And it's just been, a correction ever since. And it's not about, we're not in a correction because the S&P is not down 10%. Like, that's the dumbest thing ever, right? So anybody who ever says that, just punch them in the face. The market's been correcting for 2 months.
JC, a few months ago, what if I came to you and I say, hey, dollar's going to start moving higher again, and it's going to rally with crude oil. They're going to break out together.
Yeah.
You'd say, yeah, probably. Crude oil and dollar break out together.
I mean, we've seen it before, right? We saw it last year, so why not this year?
Man, I mean, don't overthink these things, right? You would have thought dollar lower would send crude back to 90, but you could overlay these charts right now. They look exactly identical.
Yeah, no, I mean, listen, the dollar was going up last year when oil was going up, so and energy stocks were going up, so it shouldn't be surprising. That's been the trend. And I don't necessarily think like it's like this positive correlation with the dollar or negative correlation with tech or S&P. I think it's closer to zero. They're just moving in tandem currently. So the correlations spike to 1, but it's probably closer to 0. No?
Yeah, I agree. It depends the correlation over what time frame, right?
Right.
But since late June, early July, they've both been moving higher. So for now, yeah.
What do you think, Blake? What do you think, Spencer? Bring in Blake?
Yep, I am getting Blake's audio set up right now. Give me like a minute, and we'll get Blake on, all right?
Needs a minute.
All right.
Needs a minute.
1 minute.
I like it. No, I like it. I was hanging out with Blake over in we had a little late night conversation. Both of us were in interesting states of mind. From what I can recall. That was definitely a good time. Today's Crypto Friday. We'll save the Crypto Friday until until a little bit later in the show as the market's opening up. But just going over where the market is currently, we're looking at the Dow Jones Industrial Average futures basically flat. S&P futures down a little bit. Everything well off the highs from earlier this morning. NASDAQ 100 down 30 basis points. U.S. Treasury bond futures down 40 basis points. Gold up a little bit. Silver up 1.25%. Copper flat. Oil basically flat. And the dollar mixed with the VIX inching higher and rates inching higher as well. And that, my friends, is the market pre-market rundown brought to you by the In-N-Out Burger. Thanks to our sponsors over at In-N-Out. What else did I have? I was going to get the Bojangles in the airport on the way down there, and I had like you in my head, like Strazza's telling me about Bojangles.
Why didn't you?
Because it looked disgusting. It was a bunch of it was like a fried chicken fast food joint.
Listen, what do you want it to look like? What do you want it to look like at a fried chicken fast food counter in an airport?
I don't really want to be eating at those kind of places, so I didn't. I wasn't trying to do that, you know? Like I looked at the menu. I was like, is there anything here that I can have that I'm not going to feel terrible afterwards?
You know, good for you, but every now and then live a little. Have some airport fried chicken. I don't know. Won't kill you.
Before a 4.5, 5 hour flight, I'm going to have fried chicken? No. No, thanks.
Dude, I arrived at the Miami airport yesterday and stopped at Versailles. And if there was a Cinnabon there, I might have stopped there too.
Man, Versailles is fantastic. What a great place.
When I arrived at the airport.
No, I like it.
I'm just going to stop and eat.
No, I like it a lot. It's fantastic. Shout out Rachel. We hung out with Rachel down in California. She was hanging. We went shopping for freebies. Man, my daughter loved all the freebies we got. Nice job. Thanks for the help, Rachel.
Should we do that? Should we wait for Blake? I'm going to ask Blake. I got a question for Blake. We'll talk about
what kind of swag he got.
Yeah, we got to do best booth.
Best swag booth, huh?
Best booth. Yeah. You didn't get me any golf balls, I take it.
I didn't. I'm not gonna get him golf balls. Plus they're Pro V1s. You're not good enough to use those.
Not up to you to make that decision.
Okay? I've seen you play.
Like boxes.
You're definitely not good enough to use those.
I've improved over the last 2 months.
Oh, have you?
Yeah. New club. We're getting used to it. These things take time. Great things take time. My golf game included.
All right. We have Blake here. His audio is like just a little bit janky. But we got him and we can hear him at least. So let's get Blake Millard.
Bring him in.
Director of Investments at Sandbox Financial Partners. Here we go.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hello.
Hey, what's happening, my man?
How we doing?
Good? Doing all right, man. Doing all right. You made it back okay? Made it back after a long week?
Anything.
Blake.
Wait a minute. Oh, he can't hear us again? Okay.
Guy's audio.
Wait,
all right.
No. We just fixed this problem in the other room, Blake. If he can't hear us, damn it. Okay, 1 second. We just fixed it. Oh, he can hear us.
We're live, boys. Let's do it.
Okay.
Oh my God.
Yeah, I told you his audio is a little bit janky, but I can understand him, and I haven't been able to fix it this morning. I'm not sure why. Every setting is not.
I hope you didn't do this on Charles Payne, Blake.
It looks like we got to figure this out by 2:00 today. He bumped me yesterday. I guess President Biden spoke yesterday at like 2:30, so they bumped me. So we're live today, and obviously we're going to have to figure out the microphone.
He's using the Yeti, which you should never use.
And then Blake, what was your favorite booth at the conference? What was the best giveaway?
The best giveaway?
Best gear. Best gear swag.
I don't know if it was the booth. Speaking of food giveaways, talk about the food. The food trucks were awesome. I heard you guys earlier arguing about burgers. That burger at 8:30 after a long day with a beer or two in you.
Nice. A beer or two.
I mean, how often are you going to these conferences and eating food this good and getting In-N-Out served to you 10 feet away from a concert. It's awesome.
I know.
Yeah.
It was pretty fantastic. And then what was your favorite presentation at the event? Anything stand out?
Great question. Probably Gunlock again. He was great last year. He was great this year. I kind of wish some of the like Bond King fight stuff was sort of just put to the wayside, but I think he had some really, really important things to say. For a guy who's been in the business for as long as he has, I mean, these are really smart people that you should be paying attention to. He made some comments just about like the interest expense and the amount of debt outstanding that's coming due. I sent you guys a chart on that. We could go through that. But I think there's just some real implications there for.
Yeah, why don't we? Throw it up, Spencer. Throw up the chart.
So Blake, I totally agree with you. Last year, Gunlock was my favorite. I missed a lot of what he said this year, but maybe you could fill in the empty spaces.
He said Bill Gross. He says Bill Gross seems very depressed and he should retire.
I heard that part. That was all the talk afterwards. But last year, it was really interesting because rates were screaming higher, and he came on and gave a long talk with Wapner last year. Also, and his whole thing was they're going to go too fast, and then they're going to be forced to. They're going to overcorrect to the upside, then they're going to be forced to come out and cut, and rates are going to be collapsing by this time last year. Now here we are. They're not. Is he still? He's still looking for rates to come in though, right?
Yes. So some of this is really just the fact that the debt load is going to be almost unsustainable. Keep in mind, we were financing so much of our national debt for years and years and years in a zero interest rate environment. And, all of that is coming to roost now. So you're looking at a third of the U.S. government debt outstanding. So that's a third of all U.S. debt that's outstanding, somewhere in the neighborhood of like $7 or $8 trillion is maturing in the next year. And we're not financing that at zero anymore. We're financing that at 5. So when you think about just like the budget deficits and the sustainability to finance our future at these rates, it's just untenable. So I think he was just saying the Fed's just going to be forced to cut, whether it's a credit event, it's a recession, or it's just the sheer will of how expensive our debt has become. And the other thing he was basically saying was the recession that everyone and their mother was calling for this year just obviously never played out. And now that everyone is essentially abandoning that forecast, that perhaps now that it's the time to start looking towards the recession. And he was, I think, calling for it in the first half of next year.
You got to be careful with these bond guys. They're always looking for a recession, aren't they?
Yes, they are.
I think he was like, I don't even want to be a bond king, right?
Yeah. And then, of course, Wapner ended the interview with, "All right, ladies and gentlemen, the bond king." Sure, he hated that comment. No, he was great, though. He was great. A lot of good speakers. Bob Elliott, I don't know if you guys are familiar with his work. He was with Ray Dalio. I think he was like the head of their research on their investment committee. I have my CFA, and for whatever that amounts to, and when I hear him speak, I'm always learning something. Half the time I don't even know what he's saying, but he was great. They were great. There was fundamentalists. There's technicians. JC, I heard you speak. You have people really from all over the street, different perspectives on markets. It's really nice just to force everyone to put their phones down, set aside the email. There's no meetings really taking place. You can just really be present in the moment and appreciate a lot of these really smart people reflecting on what they feel is going on in markets with tech, where the direction of all this goes. And I was just there to listen and take it all in. It was awesome.
Yeah, that was great. All right, let's talk about markets. Talk to me. What's on your mind? What are you thinking here as we enter the fourth quarter?
Well, we obviously have had a very, very strong year. S&P's up 18%. A lot of that obviously concentrated communication services, tech, consumer discretionary. All of those are basically tech adjacent. Energy has really been strong now, despite oil just absolutely ripping. I've obviously been reading you guys on that. I mean, I think if we ended the year here, even slightly below here, I'd call 2023 a huge win. We worked through a lot of negative headlines, terrible sentiment, just like when everyone thought the world was ending and this recession's coming. Markets have done really, really well. If you were a long investor this year, you got paid pretty handsomely. And I think we're probably due for more of like a breather, and consolidation would be sort of where we feel markets are from here. But there's always opportunities.
Haven't we already seen that for 2 months, though?
Well, you know, another funny thing that's happening under the surface is earnings now are finally starting to be revised higher. You're seeing the analysts take up estimates. This means that what these guys are doing, I know this isn't exactly your audience, we're talking discounted cash flows now.
Oh,
When they are taking
But we
their
do like this, the sentiment, the analyst revisions as part of sentiment. That is a
Correct,
lot of
that's
work that we
true.
do.
But when you're seeing these take up, that means they are factoring into their fancy models and their forecasting, and they're seeing where rates are, and they're still showing that earnings are going to recover. We had a very shallow earnings recession, if everything now is behind us. It started in the fourth quarter of last year, came through in the first and second quarter this year. And, you know, if the analysts are taking their estimates higher, we're seeing the earnings revision trend slowly making their way up. Obviously, we're not near where we were at 2021 levels, but my goodness, those were some crazy levels. I mean, I think that means that there's still some good work to be done in front of us.
And are they revising these earnings estimates because of all those things you said, or are they just changing? Or are they just chasing price?
They could always be chasing price, you know.
Come on, Blake. We know how this works, right? Come on.
Yeah, no, obviously. I mean, that's always a concern and something you always have to consider. But Spencer, if you could throw up the other chart about volatility, I think this is a really, really important piece of the markets this year. So if you guys recall last year in 2022, right in the middle of the year, we had something like 4 or 5 consecutive very hot core CPI readings.
Yep.
It was like month after month, it was coming in at 0.6. I think it was 4 out of 5 months. The funny thing happened in October. That was the last very hot inflation print. That's also the time that we know that the dollar basically was, you know, peaking. Rates were starting to finally break down. There was a very structural shift that was going on in the market. Things were really starting to change. It was actually that morning of October 3rd that was really the intraday bottom. That's when we got that hot CPI print. You guys remember we were down 2% pre-market. We actually finished up that day, I think like 2.5%. Bullish engulfing candlestick, love it. And really ever since then, it's been just straight up. And you can clearly see from this VIX chart, we've already moved past it, but the VIX has really just been in a downdraft ever since. Inflation really hit a wall. And when you come off a negative year, so think about 2022, how bad it was, sentiment was washed out, S&P's down 25, triple Qs are down 30-something. When you come off a negative year and you start looking at different cross-market variables, how important the VIX is to what can happen in markets the next year. And most of the time, 83% of the time, we mean a median gain the following year, a down year, up over 20%. So that's just a very, very powerful input to consider. And I mean, we've seen it. The VIX is just asleep. You know, we're basically right near the lows of the year. Where are we at today? We're at 12.
The VIX is looking to close the week at the lowest level in over 3 years.
Yeah.
Which is, you know,
So yeah,
insane.
this is in the
think
face
about
of
it.
all these scary headlines that people love to shove in front of you. I mean, I think this is a very, very important part of the story this year. You just can't underestimate this collapse in VIX. and just how much it's really stocks.
Yeah, no question. Now, there's some volatility elevated at the individual stock level, even at some individual ETFs, but the S&P 500 volatility is just non-existent, just doesn't exist.
And for the average investor, that's kind of what they're looking for. I know you guys are looking much more granular. As you said, you're not only looking at indexes, you're looking at sectors, then you're looking at industry groups, then you're looking and trying to siphon off the best of the best within those groups. But for your average investor who's just allocating to their 401k and they're just buying SPY, when they're not seeing these major gyrations, that's a pretty powerful thing for just an average investor.
So what are you thinking into here the end of the year? Can you talk about, how you look at things for Sandbox, as a director of investments there, sort of how you're approaching from now to the end of the year? Is that a little too short term for you, or, do you live there? How are you approaching this market for the rest of the year?
Great question. So again, we're a RIA. Our investors are much more long-term focused. These are great American families across the United States. We're managing 401k plans, IRAs. We're not necessarily always managing for like the next 2 or 3 months per se. But definitely there could be some caution to be warranted. As I said, we've just had such a strong year this year that I think some digestion is absolutely possible. And then, of course, when you're looking at different asset classes, I think we're still pretty neutral on equities. We did have a slight overweight for the majority of this year, which paid us very, very well. In bond land, we pretty much have almost no exposure there. Most of our bond exposure comes at the very, very short end, and we pair it with structured notes that are tied to equities. And again, when volatility is low, we're not as concerned with the structured notes. But no, I think we just have a pretty moderate posture going into the end of the year. And when there's always opportunities, we'll look at that, either at a sector basis. Strazza and I were talking, in the last week or two about doing a value to growth shift. So we're always looking at opportunities, and it just kind of depends on where markets are coming in, where the data is coming in, and we go from there.
Can you quickly touch on structured notes? I happen to be on a panel talking about structured notes, which is nothing I ever thought that I would find myself doing. So that was really interesting. I didn't realize there were $2.5 trillion currently in structured notes. Like, that's a lot.
Yeah. So
that's like 2.5 times the entire cryptocurrency market in structured notes.
So,
didn't see that coming.
Back in my days when I was at UBS for a million years, we were one of the first teams to actually implement structured products. This was back in 2015, and they're pretty powerful tools if you really know how to use them correctly. There's
Big
essentially
by the way.
For our listeners right now who aren't maybe as familiar, there's essentially two buckets. There's what you have are called growth notes, and then you have what are called income notes. The growth notes are essentially asymmetric risk and reward opportunities where you're trying to protect some on the downside, but it's like leverage on the upside. You hold this note for different tenors, 3 years, 5 years, 7 years. We use them primarily more on the income side, where these things are tied to the performance of underlying indices, and if certain metrics are met, you get these coupons. And, for the last 5-7 years when rates were at nearly zero, and again, as I said, we're managing money on behalf of individuals in their retirement, that's a really, really difficult situation to find yourself in with yields just zero-based. So we were using these products paying us 9-10%, and these are wonderful tools. Our clients love it. They love the yield that they generate from it, especially, pre this interest rate, this rising interest rate environment. Obviously, that sort of resets things and makes us think now, if you got treasuries paying 5% for however long that is, that's a pretty powerful hurdle to clear. But no, structured products are great. We've used them for years with great success. I buy them myself. I put them in my parents' account. What's the the panel? What's the overall message that you're trying to share with people?
Me personally?
Well, they asked you to speak on the panel, so you got to have something to say.
Oh, I honestly, to be honest, I didn't even know I was going to be on the panel talking about this. I thought we were talking about the markets. So we did, and then I was with a guy, and I was kind of just asking him questions because I understand structured notes. I've traded these in the past, but like I used to trade these things like in 2008, like when they first came out. Like I feel like 07, 08, I was trading these things, 09 maybe. It was a long time ago. We used to call them structured. We used to call them were they reverse convertibles? No,
I don't even know.
What did we call them? We definitely didn't call them structured notes. I think we called them
They're
reverse
called,
convertibles.
There's all sorts of funny names.
It didn't make any sense at all, but it's interesting. So I was just asking them questions. $2.5 trillion, and what was also interesting is that they're much more popular in Europe than they are in the United States, and even in Asia also. So you can't even argue that it's because investors are more conservative in Europe. Because you're seeing more of them in Asia, and they're definitely not conservative out there. So, interesting.
They're popular in Asia, and they're really, really popular in India. They're not as big, I don't think, really here in the United States. Really, to your point.
Yeah.
Like, what is going to be your biggest sector weight into the end of the year?
Right now, we are our biggest probably sector overweight against, especially when you're measuring yourself against the S&P, at least for like the equity side, domestic equities, energy.
Got it. But that's just because there's so little of it in the S&P.
It's so underowned, so supply-demand imbalance. OPEC keeps coming off with their cuts. Saudi Arabia. Our reserves around the world are at very low levels, and global demand is surging. If I'm not mistaken, it's like at an all-time high. So those are really powerful narratives. Now, of course, those are more structural. Those are longer-term themes. But on a more short technical basis, I think we still have quite a bit of strength in those areas, and they're coming off some tough comps from the last couple of years, so that's always.
You also just kind of make an interesting point. What I'm thinking about now is like, if you have to benchmark your portfolio allocations to the large cap averages, and that's how you measure that, is anybody overweight tech? I mean, you're gonna have to put what, 30% into tech just to match the interest? And is that?
Well, now, if you put in some of those tech adjacent sectors as well, then you're really talking about a huge
like communications or something like that.
Yeah,
Amazon, Google.
So I think again with like hedge funds that you always hear this. They were having trouble earlier this year because they were really underweight tech. Your standard mutual fund managers who are against a benchmark, if you're not at least at the benchmark level, you're going to find yourself underperforming every year. Because these guys, the performance speaks for itself, and it's because they're these massive businesses that are hyperscalers, and they're in Google themselves. They're you guys know the data on this. They're larger than certain countries' entire GDP. A lot of them. These are just massive businesses, and Google itself is like a diversified conglomerate. There's just so many different businesses.
Expect more of these, by the way. Expect more of these individual stocks being bigger than most economies. All right, Blake, listen, I appreciate you being here, man. Good hanging, as always, in California. Hopefully you make it up to New York soon. Let me know. We'll grab some beverages.
Good luck this afternoon, Blake.
Thanks, fellas. Appreciate it.
Tell Mr. Payne I said hello.
What were you doing up in Ann Arbor?
I had a wedding, but my sister-in-law is a freshman in Michigan right now. So
did you get to the game?
No. I was there hours later. So, but I lived in Michigan for 7 years, so I've been.
You gotta get back. That's where I went to school. The football games there. You were talking about fall Saturday in Ann Arbor. You gotta get to a game. So, all right, guys. I know I gotta go.
Okay. Thanks a lot, Blake.
Bye,
all right.
Blake.
All right, guys. You realize it's been like over a week since we've spoken to Kimmy.
Yeah.
And as I mentioned off the top, today is a very, very large. Every options expiration is a large option expiration, but today's is like what I see this morning, like $3.5 trillion, $4 trillion in options expiring today.
How many witches?
At least 3, maybe 4.
Three and a half witches today. How about that?
Got it. Okay.
Three and a half witches today. I wouldn't quite say 4, but I wouldn't quite say 3 either. So 3.5. Okay. Let's get Kimmy on here and see what she's up to.
Kimmy,
Morning, guys.
what's up? You miss us?
Yeah, how was what was that event? Future Proof.
It was Future Proof. So it was out in California. You know Josh Brown and Barry Ritholtz and all them?
Mm-hmm.
That's their conference. So they're old pals, and a lot of our customers are there for sure. A lot of old friends. So I tried my best not to schedule any meetings ahead of time. Just kind of show up, have a good time. But we were busy. We had quite a few meetings. Just market stuff, business stuff. Good eats. Right. We've got friends that live locally there that took us to some local places. It's a good time. Got to bed early every night. Didn't hit it too hard.
Where in California was it?
Huntington Beach, Orange County.
Oh, fun. That's fun.
Yep, and then hung out with the crew down in San Diego. We got a nice big office there, but fantastic. Kimmy, 5 for 5 yesterday.
Kimmy was also busy. You were
right
busy. She was busy.
One of the guys in the room, I said, I missed you guys, but I didn't miss put makeup on in the morning.
Aren't you the one that was telling me the other day how you like to get dressed up and you like to go out, right? Weren't you telling me that?
Yeah, not at 9 in the morning.
Oh, that's all right. But you get to hang out with us. Who's cool?
I used to sometimes walk to work with like one eye done with mascara and I forgot the other one.
When you walk to how long was that walk from Battery Park to Wall Street?
5 minutes, 6 minutes.
Yeah, that was pretty convenient. That was a good location for you to live in.
Yeah, exactly.
So hold on. So 5 for 5 yesterday. Long UPS for a profit. Meta shorted Microsoft, shorted Lulu, and Buck Goldman Sachs all for profits. Long positions in the VXX and the CVS. But I like what you're looking at coming into the day here. You're looking at the PayPal, huh?
Yeah, it's kind of been stuck. It's like it's stuck here. So whether it's going to push through or not, it's under a Bollinger Band. This 64.50 area seems to be a resistance, and it keeps failing there. It has a nice pattern. Sometimes you could try it to see if it pushes through or not. That's the whole thing. Sometimes they work and sometimes they don't, and sometimes it goes another day, right? So it all depends, right? Today's Friday.
What do you think? So a gap fill towards the low 70s, or is that thinking too far ahead?
That's thinking too far ahead, but that is potential. Let's see if it could at least get to like the 66 level. You have major resistance there. I think it's the 50-day or something's up above there. But we have today is option expiration, but also it's like the end of the quarter kind of. Well, it's like monthly.
That's where all the witches, a lot of witches. Not all the witches. Aren't there more witches next week?
No.
No, this is it. This is the witches.
No, this is the quad witch, right?
Is it?
Oh, because it's the third Friday. Because
third Friday,
September 1st.
This is the quad witch. Yeah.
Yeah.
So many witches.
This is the quad witch.
Yep.
So then, how are you? So here we are. We're past August. We're past Labor Day. We're past the week after Labor Day, which is still that hungover, and we've moved on. So are the big boys back? Like, are we in a market environment?
They are, but it feels sleepy. It's really weird. Even though the market, started to really push higher, like late morning yesterday, it just I was sitting there trying to like pulling teeth, like it just feels sleepy. I feel like people are not sure what to do or which way the market wants to go because we had CPI this week, we had PPI, we have the Fed next week, so we have a lot going on, like a lot of headwinds. PPI, all this stuff is not great, and the market trickled higher, right? We closed the gap on the SPYs to 449.17. Then we hit the 450 level. Could we go to 455 on the SPYs? Of course, but it just felt slow. It was very weird. I felt like it was like pushing slow, and then all of a sudden certain things took off. and then came back in.
Well, we're
You
still
know,
in this range for the S&P, still in that range.
yeah, it's
you
kind of
know?
like
So-
a tough market in here. It's a little tough. Like every day, I'm like kind of like, let's see what becomes of the day. Sometimes you have to sit there and wait and see if sometimes you have to be a little patient and see if anything comes, in front of you. Like something like all of a sudden, I set alerts, whatever. Apple's gapping up this morning. I'll look at Apple, see if it holds. I'm not going to marry the trade just to see if it gets going, maybe to 178, 179 or so.
All right, and just to recap it here, Kimmy has active open short positions, open long positions in VXX and CVS, open short positions in the Qs, KLAC, Netflix, Celsius, and USO. So a lot going on in addition to all the day trades. If you want to be in Kimmy's room and actually get alerted to her trades when she is making them and not morning after, when we talk about them here, you can use the link that's on the screen, use the link in the chat, use the link in the description. Check it out. She's going there right now. She'll be trading all day. Kimmy, go get
Have
him.
a great weekend,
Go get
guys.
him, Kimmy.
Bye. Welcome back.
Thank you,
To
Kimmy.
be
Appreciate
back.
that.
It's nice to be back in the saddle. Traveling is fun. Get to hang out with the crew and everything. Man, it's good to be back.
Traveling is stressful. First off, there's like the pre-travel run up where you have to like prepare for your travel, and then there's like the post-travel hangover where you have to like remember how to do things.
That's
like,
right.
You know what I mean? And so traveling is hard. That's why I don't travel. I don't like traveling for that reason. It's just it's stressful.
You don't even have any kids. See, when I
I
was in your position, I would travel
know.
quite a bit, but now with all these kids, I can't go anywhere.
I know. That's true. Okay.
What do you say? We do a little Crypto Fridays, eh?
Do we have crypto charts?
Hell yeah! Do we have crypto charts? What day is it, Spencer?
It is Friday. It is Friday. So, all right. Where's my crypto Friday bumper? Let's go.
Hey, did Louis get home okay? Is he coming on with us today? I haven't heard from him.
No, next week.
Louis is coming on next Friday.
Next Friday.
Yeah.
Check your Slack, Strazza.
Yeah. All right.
Okay, crypto schmipto. Here we go.
Real quick, Thabo in the chat. We're just joking about the witches. I believe you're right. Triple witching is as good as it gets these days. It is triple witching today. In fact, it's a $4 trillion triple witching, whatever that means.
How about that? Can we start with the first slide, 16, because I think that's an interesting one. Strazza's been pounding the table on this 25,000 level for a minute here.
Hey, look at that.
Right?
Yeah. Wow. Hey. Market
Continuing
memory.
to hold in there, that 25. I mean, I feel like you and Alfonso, Louis, you guys really been pounding the table on that 25, while my head's been more on the 30, 31. If you want to show slide 15, this is where my head is at, kind of stuck below this overhead supply. And I think we can all agree that both of these levels are important. So this is like a longer term, bigger picture overhead supply. 30, 31,000 is the problem. Now flip back to the other one. On a more short-term basis, this looks a lot more constructive than this one, finding support. So, that 25 to 31 range, I think we're stuck in that until we're not. Right?
You talk about how the S&P is stuck here between like 43 and 47 or whatever it is, right? That's just where you're living right now if you're trading S&Ps. Bitcoin, your world is 25 to 30, 31 now. Both levels are critically important. I agree with you, JC. But it's a tight range. It's a tight range for Bitcoin.
And throw up the altcoin index. This is slide 18, and this is a big one too, because this kind of tells the story of all the other ones, right? So not just Ethereum, but the other ones. Throw up the altcoin index. There you go. So really stuck in this range towards the lower end of the range, but really a nothing burger. Does it resolve lower? Do we stay in this range longer? But it really, really is a messy sort of situation. And then let's throw in the Dogecoin, because a lot of people maybe like joke at the Dogecoin. I know Spencer, I feel like Spencer hates the Dogecoins. You hate the Dogecoin, Spencer?
Spencer, why do you hate the Doge?
Yeah, why do you hate the Doge? He doesn't like the Bitcoin forks.
Because it's not a serious thing.
What's not serious about it? It's 8.7 billion.
It's not serious.
What's not serious about it?
What's not serious about it? It was founded as a joke. It was created as a joke.
I think maybe they turned it into a joke, but it was a Bitcoin fork, just like so many other Bitcoin forks.
You like the Shiba then?
I hate them all. I hate all the alts.
But I don't know why you have to hate them.
It's a strong word.
Hate is a strong word, Spencer. Starlink is using it, according to Lee Churchman. I don't know if that's true. Is that true?
I'm not sure where to draw the line on what is an alt and what isn't an alt.
They're all alts except for Bitcoin.
Oh, well then I don't hate all the alts, but these ones, the jokey ones, I do.
It's $8 billion. It's not a joke.
Here's the problem.
I don't know. What functionality does it have?
Who says it needs a functionality? What functionality does gold have? What function?
It doesn't need a functionality.
No.
It needs a reversal pattern that looks more like Bitcoin for us to count.
Someone's stinking. Somebody's stinking.
All right.
You look at the altcoin index, we're just stuck in a sideways range.
It looks like Dogecoin, kind of.
It's starting to look more like distribution than accumulation, right?
Wow.
We need to find out, are these actual reversal patterns and they're going to end up looking like Bitcoin, or are they going to go in the other direction? And if they do, should we expect Bitcoin to, leg up after resolving higher from its reversal pattern, or does it fail and follow lower? Those are the questions I'm thinking about.
Yeah, and I think those are valid questions. I mean, I honestly, I couldn't have said it better myself. I mean, that you nailed it. You absolutely nailed it. Are these longer term reversal patterns? It certainly doesn't look like it, right? Doesn't look like it at all.
I try to bring my best on Crypto Fridays, JC.
I guess. I don't know, but that was perfect. That was very well said. I think so. I want to show Dogecoin as an example because it looks terrible, right? Pressing down against the lower end of that range. I mean, at the end of the day, Strazza, it looks like the altcoin index, right? So this is kind of like a good representative, a bellwether of the altcoin index, right, Spencer?
Shiba, Ethereum Classic.
Is the altcoin index equally weighted? How does that even work?
Ours is, yes. So that index we just showed you is the 10 largest outside of Bitcoin.
Okay.
So ours is usually they're not. There's another altcoin index that's cap weighted. It's a lot of Ethereum, right?
Well, funny story. I believe that one that you're talking about no longer exists. That's what happens when, firms like FTX blow up on us. So we were using a cap weighted FTX altcoin index for a while. They had a lot of cool indexes that we used, but no mas.
Yeah, all right. I like the comment in the chat from 3/4. Doge is what is wrong with crypto for people who believe in blockchain tech. Yeah, there's like the blockchain believers, and then there's just like the price go up people.
I'd say that's not what's wrong with crypto. I'd say that's a good thing. The fact that you could take an open source code and you could fork out, and now you still, even after this correction, you still have an $8 billion market cap. You think that's what's the problem with crypto? I think that's one of the good things about it. No?
Yeah, I mean,
how is that not a good thing that you could just take open source code, fork something that exists, and now you have an $8 billion market cap? By the way, it used to be a lot bigger. It used to be 80 billion.
Yeah, no kidding.
but it's still $8 billion. That's a lot of money. No?
Yeah. I guess
crazy. How is that a bad thing?
I guess it's not bad if you are the creator of Dogecoin, but I don't know. I
you're a
I know
shareholder on the way up, or you're a short seller on the way
I know
down.
that I know that price trumps all, but I do like my investments to have some, real world application to them, right? And
first of all, they do have real world application. Second of all, who cares?
I just said I prefer it. That's
why.
So I know that I'm not just investing in a Ponzi scheme.
What's wrong with investing in Ponzi schemes? It's a great thing to invest in.
As long as you get out before the scheme.
Well, yeah, that's fine. Yeah, but then somebody else's problem, not yours. Who cares?
Before the Ponzi's. All right.
That's right. There's a lot of great Ponzi schemes out there that you can make money off of.
Hey, negative Nancy.
Am I wrong? Yeah, seriously. Come on, Spencer. Cheer up. It's Crypto Fridays, baby.
All right.
You're not even hungover like the rest of us.
Yeah.
I mean, I was on vacation. You act like I wasn't on vacation. I was. All right. Do we have any?
Special's like, I'm just as hungover as the rest of you.
Do we have any more crypto charts, or was that?
I mean, we could. You want to talk about more forks?
No, I was just asking in a.
We could get down with the Shiba Inu and all those. No, that's
Okay.
enough for Crypto
Okay.
Fridays. Why don't we let these cryptocurrencies maybe do something for once?
The market's been open for 30 seconds, JC, if you want to do the what's moving segment.
Well, I'm not the what's moving. Spencer's actually the what's moving. And then why don't you do that?
We have a lot to talk about on just like the trending, what's moving nature of the market today.
Let's go.
Yeah, there's news. I mean, we haven't had the show for a week, so we missed a lot of news in the last week. I'm not gonna cover all that, but yeah, we can do some what's moving. Sure,
do it.
All right, we talked about ARM, right? We talked about the IPO up again, another 5% today, off their IPO yesterday. I'm watching Adobe down 3.5% on their earnings report overnight. Actually, I don't think it was that bad a report, but price is all that matters. So 3.5% for Adobe. I think we have that chart here somewhere. Also, yeah, there it is. Also watching the automakers, specifically Ford and GM, not so much Stellantis because it trades overseas and that's the primary market there.
Give us some background here.
Yeah, we do have a strike, notable in the sense that it's the first time that workers at all three major U.S. automakers strike at the same time, but it is only about 10% of the auto workers union of the part of the union that actually worked at automakers. Only about 10% of them are involved in this strike. So it's relatively small from that standpoint. It's still a lot of people, but it's not like the whole union is striking. It's not as if we're not going to be making any cars. It's just select facilities in Michigan, Ohio. I believe Missouri was the third state, I want to say. So, it's going to be all over the headlines today. It hasn't happened ever where all three strike at the same time. So there's that. So just keep an eye on that. And
Tesla,
keep an eye on these names.
Where does Tesla stand with this issue?
Well, Tesla's workers aren't in the UAW. So
is that why their stock doesn't suck because they're not communists?
Well, hey, listen.
I'm listening. I'm asking.
The UAW workers are, because of the union, are far more costly, right? They are more expensive than Tesla's workers or any other automaker that's not part of the union. It does help Tesla, right, when they're to have their workers not strike against them. But GM and Ford are in a bit of they're between a rock and a hard place here because they need to, they have been investing billions and billions of dollars in basically, catching up to Elon, right? And they have to do this thing where they like sabotage themselves at the same time because their whole business is internal combustion engines, and they need to pivot to EVs, and that takes years of investment at a loss, right? And so they have to kind of do this transition. They have to sort of sabotage themselves at the same time while trying to grow this new EV thing. It's very hard. I think the stock price, really, the charts speak for themselves. If you want to, get an idea of just sentiment, I mean, the charts really do speak for themselves. I think that tells you all you need to know about, the state that these companies are in.
Why don't you throw up slide one?
I don't envy them at all. It's really a tough spot. I certainly understand why workers in the union would want to bargain for more money, but it's not as if they're bargaining with companies that are coming from a position of strength, right? I mean, it's not like it's Tesla, right? I mean, GM and Ford, they've got a tough road ahead of them.
I can't believe GM and Ford still exist. Can we look at this Tesla? It's Strazza. Is this one of these like not a head and shoulders top?
Yeah, I mean, sloppy one, but that's not a top. Failed top.
Right? Like my favorite topping patterns are the ones that are not actually topping patterns, but actually just consolidations of ridiculous gains. And I don't know if you heard, but Tesla had ridiculous gains, and this consolidation that looks like a head and shoulders top, and head and shoulders tops are actually very rare. Generally, they're not that at all. And they actually squeeze higher when they get back above that neckline. And that seems to be what we have here. Tesla, new all-time highs coming soon. We got a market cap right now of $877 billion. I mean, we're talking about a $1.5 trillion company. It's coming, Strazza. It's coming. You better get ready. See what happens when you don't have these stupid unions and paying employees that haven't worked there in 20 years and all this nonsense?
Listen, when we threw up the GM and the Ford chart, the problem with those charts, the same problem as the Doge chart. Still trading around the lows from last summer.
Wow, are you calling GM and Ford a Doge, comparing it to this?
No, but we talk about some of these tech stocks, some of these leaders that are up 200%, 300%, 400% off their lows from last summer. GM and Ford are still in the same place they were when the market bottomed. If you look at the Japanese automakers, they continue to stand out as the clear leaders in the space. Toyota Motor Company or Honda Motor Company. I mean, these charts look so strong right now. I love this. I love Honda. Toyota, when you zoom out long term, even stronger than Honda. The last couple weeks for these stocks too have been one of the best winning streaks over the past several years. If you look at something like a 4-week rate of change. So things are really working. You're seeing momentum come into these names right now. If you're looking for an automaker, I like these two
and
options.
who was he in the chat that mentioned the compounded friends last week or whatever, 2 weeks ago at this point? I don't even know. Their guest was talking about, the market is saying Tesla and Toyota, right? That's it. Those are the winners. Everyone else don't care. Right?
Look at my Toyota chart here.
Yeah.
On slide 2
charts.
It's Tesla. It's Tesla and Toyota. I love Toyota, man. I wish I had a Toyota.
Look at that. So this is a monthly chart, so it's an incomplete candle, just to be clear. But look at that base, man. Retest successfully, right? Look at all that resistance turning into support. I mean, Edwards and McGee was right. They were writing about this 85 years ago. And now, Toyota Motors doing the exact same thing. So very, very impressive. Can I have can I do a what's moving? I got a good one.
Do it.
Yeah, sure. What do you got?
Slide, where is it? Slide 5. I was having a little chat yesterday with one Rob Koifman. And we were just, talking about Koifman charts. By the way, if you guys don't use Koifman charts, I don't know why. You should start. And so Rob is the founder there, and most founders of charting softwares are tech guys trying to get in the finance game. In my opinion, the reason that Koifman is so good is because it's a finance guy getting into the tech game, right? He's one of us, right? So, I think he gets it. And so, I was asking about, the data that they have for analysts. And one of the things that he wanted to do was kind of take a combination of relative strength stocks within 3% of new highs with very few buy recommendations where sell side analysts just have it dead wrong. And this one really stood out. We've been pounding the table on reinsurance stocks, Marsh & McLennan, Aon, here for months. Really years, if you know us, but here on the show, certainly for months. And look at Aon making all-time highs. And of the 19 firms that cover the stock, only 2 have buy recommendations.
You really don't see that too often.
That's right. So these are very unique rare circumstances. There were 3 stocks, actually, that met his criteria. I'm not sure what market cap he was filtering by, but there were 3 stocks that met that criteria of within 3%, but with the majority not having buy recommendations. In this case, only 10% of analysts have buy recommendations.
Fade the street.
Yeah, no, nice call, JC. That's a good one. A couple more for what's moving, and then we'll bring on Ian and talk about commodities here. Planet Fitness announced their CEO is stepping down effective immediately. They have a new interim CEO. So PLNT down 14% and falling today.
If you're a CEO and you leave the company, you know how a lot of times the stock goes up, like you kind of like feel like an asshole. Like in this case, you kind of feel good. You'd be like, oh, you know.
What happened? What happens first? What happens first?
Why is he leaving?
They didn't say, but he is still he's staying on the board. So this isn't. I think this. I don't think it's like a scandal. Because if it was, he'd be off the board too.
Talk about distribution. What an ugly chart.
My question is,
who's going to a Planet Fitness?
Well, my question is what happens first? They find a permanent CEO or someone cancels a membership, because it's impossible to cancel your membership there. But they string you along forever, make you jump through 1,000 hoops to get out. But at least that's what I've heard. I don't actually go there. What else did I have here?
Is this a massive top, Strazza, in the old Planet Fitness?
That's an ugly top, man.
You like my fundamental analysis? Who the hell goes there? That's the extent of my.
I think people go there.
Do they?
I mean they are, I believe, the largest national gym chain, maybe the only national.
It's the no judgment zone, JC.
Has there ever been a gym that didn't go bankrupt? Like remember, like Bally's, and then right? Like I feel like every gym ultimately goes bankrupt.
LA Fitness. I don't think most of them are public.
No, they're not. That's what separates these guys.
Throw up the chart PLNT slide 1 just so you can see that distribution. It's nasty, man.
Yeah,
right?
And a big stick lower today. Maybe this thing's on its way.
I remember watching this in 2018, being like, "What the hell, man? How are they going up every day?"
Seriously, what were they doing?
Couple more.
They were cooking the books, Strazza.
All right, they were not.
Speaking of great Ponzi schemes, right? That was a good one.
They were not.
Time looks terrible too.
I am also keeping an eye on Netflix, having a rough go of it. Ever since a couple of days ago, their CFO was at a conference, and I guess breaking news: strikes are bad for business, right? So that's basically what the CFO of Netflix said, and the stock has had a really rough week there.
Yeah, but it should pull up the chart in slide 1. Regardless of what the CEO is lying about this week or not. Like, look at we ran right into resistance and failed. Like, I mean, this is as classic as it gets, right? I don't think this should be a surprise to anybody, regardless of whatever the CEO said or didn't say.
No,
former support turning into resistance. Classic.
Netflix was a great trade about a year ago. This one was giving us beautiful levels to get in, and now, like JC's saying, this is just an obvious area to get out. No.
Yeah, Ben. We talked about it on the conference call. I mean, this is as clean. They don't usually get this clean.
We were in this run 250 back in October of last year.
This is a great short on the way down too.
And then keeping an eye on, I'm watching Unity as well. They announced a new pricing decision the other day that pissed off a lot of people, and they actually had to shut down their office. They had
Unity software?
Yeah, they had to close an office because they received a credible threat against them. So they pissed off a lot of developers. They said they're going to start charging per user up to after a certain threshold, And so anyway, okay.
So what happens when you get into a fight in Silicon Valley? Somebody just calls a bomb threat to an office.
Maybe, yeah. Apparently, I don't know. All right, let's get Ian Kelly on here. Let's do some commodities. We got a lot going on in commodity land. A lot is breaking out. Ian's here. He's ready. He's got the
uranium and coal mostly, but yeah,
and more. But all right.
Welcome back, guys.
Love it. Good to be back, Ian. Good to be back. Nice to be back on the East Coast. It was lovely out there. It was lovely.
Oh, I bet. Good time?
Hard not to have a good time, hanging out with old pals and stuff like that. A lot of laughs, as you can imagine. Maybe learn something or so, killed some brain cells, standard operating procedure over here. I'm a big fan of theirs, been friends with those guys forever. So, to see them, hit $4 billion in assets under management, put on a great event with 2,500, 3,000 people. Like, I couldn't be more happy for him. Good for them.
Their compliance officer would yell at you right now for saying $4 billion.
Right, because it's like I could say whatever I want because I don't work there. But yeah, they're like at 3.998 billion or something stupid. But this was like as of like the last registration, they're over 4 billion now, FYI.
But that's how crazy, some of these things are when you work for these big finance companies. Like we were joking around with some of the guys, and they're like, "Yeah, we can't say it on stage though, because it's a rounding error." But yeah.
Yeah, but yeah, 4 billion, man. Good for them. I remember when they started the firm. They started the firm with 80 million 10 years ago. Now they got 4 billion.
Wow.
Yeah, it's wild. They put on such a good conference over there. But Ian, more importantly, I'm away from my desk, and my uranium and coal stocks are ripping. Is this a broad commodity strength thing, or is this the leaders keep leading? Saw this coming from a mile away. What's going on?
Energy is definitely the place to be in the commodity space right now. Crude oil just reclaimed a critical polarity zone relative to the CRB index.
Yeah,
we're seeing other areas catch higher as well. I mean, feeder cattle, live cattle continue to hit new all-time highs.
Sugar, new decade highs.
Sugar, finally breaking out. Cocoa continues to cruise higher. So in another a big data point is commodities are starting to catch higher relative to bonds again. After consolidating for about a year, that commodity bond ratio is breaking higher. So
and they've been moving higher relative to stocks too for a couple months at least, no?
Yes. When you flip the commodities into the denominator and we look at stocks relative to commodities, stocks pulled back on a relative basis and ran into a multi-year downtrend line, and also a key retracement level from that recent leg lower. So logical level to find resistance on a relative basis. Stocks did, and commodities are just the place to be.
So let's talk about what the trades are then. You mentioned ags, you mentioned energy. Do we just hang out there? What's going on with metals?
Yes, we hang out there. That's the place to be right now.
Metals just don't look like energy.
No,
they don't. And that's the thing. Like SCCO, that Southern Copper.
Yeah.
It looked like it was gonna go. A month or so ago. I want to see that break out. I think that potential inverted head and shoulders pattern finally resolves higher. I think that will be a really positive development for the broader commodity space.
You want to see the strongest stocks in these groups break out. We started to see something like that in energy, uranium, coal, right? We were talking about how the leaders were already going. Now it looks like the rest of the space is following. Let's see that with some of these base metal stocks.
Yeah, absolutely. I mean, uranium looks great. CCJ looks great. I think 55's in the cards soon.
NXE. Now NXE,
throw up slide 1 there.
NXE just ripped back to those old highs too. You got like what looks to be a real clean breakout coming in that one too. Mm-hmm. Yeah, nice, JC. You could draw a little resistance line right at those pivot highs from late 21, early 22. Comes in around 640. Use
Can we talk about the throw up slide 13 where we're looking at the coal ETF getting delisted right as coal is just getting going finally for the first time in its life.
Okay.
And so we have an equally weighted index that we overlaid there, and it's making new all-time highs. So we're looking at console, BTU.
I love this chart. This is so good. Yeah, so listen, we were talking about console, CEIX, and AMR, Alpha Metallurgical, whatever resources. Those were the leaders. They broke out over a month ago. I was still in Asia. They've been ripping. Look at the follow through you're getting. Now the coal index is going. Weaker names within the coal subgroup are going, like Warrior Met Coal. BTU's playing some catch up, but still lagging. So everything's starting to look up. And the same thing, very same theme is playing out in uranium space.
So what's really interesting there is that coal in general is breaking out. So you're getting the energy, because there's different types of coal, but you're getting the coal used for energy, and you're also getting coal used for like metallurgical coal, for coking coal, the coal used to help produce steel.
It's a great point.
So, we're seeing energy rip higher, stocks and, in the commodity contracts. Let's see what happens with these base and industrial metals. Let's see if copper gets going. Let's see, like I said, SCCO. If we just look to the coal space, it's giving us a heads up that we could see some upside resolutions in base and industrial metals.
Have we ever done any work around coal stocks and the broader energy index? And it would be two things I would really be looking for. Do they lead at turning points, right? Is there some sort of signal there like we're seeing this time around, it seems? And B, what's the beta like during bull markets? Just how much more juice are you getting from these coal stocks?
I imagine the juice is definitely on the coal stocks, but yeah, that's something to take a look at.
I thought you froze again, JC.
Am I frozen?
No, I think you're just very stoic today. You're like holding your face.
I'm getting back into the swing of things. It's it's like when you have a family and a business and you're kind of in that zone, and then you disappear for close to a week and then come back, and it's like, whoa, back to business, back to the kids, like I'm still kind of getting my groove on. I got Rachel reminding me I was hanging out with Method Man. I guess maybe we could talk about that in the recess if you want to hit that.
I'm ready.
You got to hang with Red and Meth?
I did get to hang with Red and Meth and Big Shot Bob.
Wow.
Hit it, Spencer.
Yeah, let's talk about it.
Yeah, so I'll start, but yeah, it's been good, man. It was a lot of fun. Throw up slide 1. I didn't realize I was mostly just wondering what Big Shot Bob was even doing there. I'm like, what are you doing here? And then he started going into it, and
wait, what was he doing there?
I think he's doing some stuff with investing. I don't know, but all I know is that he's got 7 championships. 7. So good for him. And the entire time that we were hanging out with Method Man and Red Man, Method Man the entire time was talking about how excited he was that he just met Robert Horry. Like, wow, that's all Method Man would talk about. He's like, yo, Big Shot Bob is in the house. It was hilarious. Method Man was more excited to meet Robert Horry than I was to meet Method Man. That I thought was hilarious.
Some great Lakers teams.
And the Rockets
and Spurs and Rockets.
Yeah, that Spurs team was ridiculous.
Yeah.
Lakers team, obviously. But even before that with the Rockets, when he was young.
You're right.
Stud. What a badass.
Yep.
Yeah, 7 championships, Robert Horry. More than Jordan.
All right.
Strazza, you got anything for recess? I have we all have a week's worth of recess. I don't even know what to say.
A lot of sports to catch up on.
Tell them about the stadium.
Just saying. We went to the Chargers-Dolphins game out in SoFi Stadium.
Oh, is it nice?
What a place. I mean, the stadium's only 3 years old, so it should be awesome, but it is. And the Megatron, I think, we were all taken back by. It's just like this huge circle that basically is the same shape as the stadium. And from wherever you're sitting, you're kind of getting a view, and it's just like a giant speaker. I've never seen a screen that large. So that was pretty neat.
It was $1 billion to make, I heard. Is that true, you think?
I'm sure.
Look at it. I don't know what these things cost.
Take a look at here's a shot of all of us. Louis, first day in the United States of America, never left New Zealand in his entire life. First day he goes to an NFL game.
Wow.
Yeah.
First day in the United States.
Louis was hanging with the boys. Look at that hair.
Yeah.
Longer hair than Sean. Actually.
Sean over there on the left. We got Strazza, Pat, Donawilla, the chart report over on the right. Brian, $5 billion for the whole stadium. That is true. But I heard $1 billion just for the scoreboard. That's the number I heard, which would be pretty impressive.
What's the name of this band? What do you think, guys?
Serious. Because we got 2 hair guys. So we got 2 hair guys, right?
We were the booth babies this week.
We were the booth babes. Was that us?
Booth babies. Yeah.
Yeah, Louis was the man. I'm so glad he got here to the United States. Hopefully we made it back. We haven't heard from Louis since we sent him to the airport. I hope he made it back.
I just pinged him. He must be sleeping. So I'm walking to the conference, and
Fibonacci.
that's a guy that I don't even know. I've never met, and he's wearing a Fibonacci as my homeboy shirt.
There was a guy. Yeah, he's here. Yeah. He was the man.
Is this Chris Brown?
Yeah.
We didn't even get to talk.
I spoke to him. He was there at my presentation at mine. He was there front row, and I'm like, oh, look at that. Fibonacci's my homeboy in the wild, and it was a first edition, the yellow one.
Yeah,
never seen one in the wild.
Classic. Those are retro. They probably resell those on eBay.
Yeah, for sure. Yeah, definitely. It's definitely more than $10 too.
No, so my favorite booth was Motley Fool this year. Last year we had to give the shout out to Morningstar. This year was definitely Motley Fool. They brought it. They brought the golf simulator. They were playing closest to the pin. People were having fun, getting free golf balls.
What was the best giveaway? Like swag giveaway?
I got some really cool vintage Goldman Sachs gear that I'm excited about. Just like
by vintage, they were brand new. There was nothing vintage about them.
Those things are hard. Those things are hard to get. Okay, just a standard little tote bag that has the Goldman Sachs logo. That's cool. There was 2 of them. Okay, you don't have one.
Giancarlo was very excited about it because Giancarlo very artsy, so he thinks it's funny having like Goldman Sachs gear like in the studio.
I just gave it to him. Yeah,
I gave it to him. I gave him my stuff. What am I doing? What am I doing with a Goldman Sachs?
That's so nice.
Where am I going with that?
JC had so much gear, and let's focus this. He was getting it for his kids, so they had all these cool little trinkets and games. Did you get like the mini cornball?
The best thing, and Rachel's here. I was hanging out with Rachel for most of that. So I gave her a couple of things. It was like a teddy bear and like something else I got her. And then I had a suitcase full of just the giveaways. And, she wasn't feeling well yesterday. So I sat with my daughter, opened the suitcase, and went one by one, just started taking all these goodies. She's like, what else is in there, Daddy? What else is in there? She was very excited about the whole thing. So
I had to bring Rose home an Invesco QQQ hat because she just loves the Invesco commercials. They're just on constantly in my house. She thinks they're so funny. So Invesco had a booth with like Nike hats and stuff.
Nice. The Koifin caps are nice.
I'm wearing my Koifin hat golfing today.
We
told Rob we would wear it on the show, so it'll make an appearance here soon.
Yeah. Shout out to Rob Koifin with the hats. Good hats.
Love seeing Rob. Love Rob. Love Koifin. You're not using it. Koifin.com.
All right. My recess is travel's a pain in the ass is my recess. I had my flight to Michigan was canceled, and then my flight home was also canceled. So I for the same reason on separate days.
What were you flying? That makes a lot more sense. I wish I had this context coming into the show today because you're in a real grouchy mood. Like you're like real negative Nancy, Debbie Downey status.
You missed us.
I'm not grouchy. No. Look,
it was the plays.
You asked what I booked. I don't know what I was thinking.
Spirit.
But yeah, I don't know why I did that. Okay. But it was not their fault. It was not Spirit's fault. It was the LaGuardia Airport. It was the weather, apparently. It was credit to Spirit. I hate them, but this was not their fault. Okay.
I doubt it.
This was the LaGuardia Airport and just a nightmare. So the whole reason, just to bring a full circle, to actually have a lesson here is if you don't have it, get TSA pre-check. That's my recess.
And don't ever book a flight on Spirit Airlines.
TSA pre-check, I'm telling you, is
flying Spirit later this year.
It's like $85 for 5 years or whatever. Just get it, okay?
Do you have to like go somewhere? Like you have to like go get interviewed and they like make sure you're not a terrorist or something crazy?
Yeah, sometimes you can do that at the airport if you just make an appointment. But
don't ever get TSA pre-check. Don't do it.
What?
Get the global entry because with the global entry you get TSA pre-check. So don't even waste your time.
If you travel internationally, get global entry.
Even if you don't, get the global entry.
Yeah, Joel had that. They seem to take it.
There's no reason to ever get the TSA pre-check. Just get the global entry.
Or if you travel domestically, you don't need the international stuff. get pre-check. All right.
And then you're going to travel internationally, and you're going to be like, shit, I listened to Spencer, and I got the pre-check, and I didn't get the global entry. Trust me.
And if you do
Get the
once,
global entry,
whatever.
knocks it all out at once.
I had a guy try to sell me on Clear. I was like, you guys aren't even in every airport. Why do I want you? Yeah, but we're in stadiums. Okay, anyway.
Okay, this is complicated. There's like 3 different ones you can get.
Yeah. Anyway, okay.
It's a global entry.
Glad to be back with you all. What the fick? 11:30 a.m. Eastern time today. Ian and I were talking cattle. We're talking hogs. Is that true, Ian?
That's right. We're going to talk new all-time highs in cattle and feeder cattle.
Oh man!
Nail down some logical targets, upside targets, and then take a look at hogs. See if hogs are going to join the rest of the livestock.
And then Strazza is doing the hot corner at 1 o'clock today as well. And that'll be a wrap on our programming for the week. So it is so glad to be back. We are glad to be back. We missed you guys. Thanks to our guest today, Blake. Thanks to Kimmy. Thanks to Ian. Thanks to all of you in the chat for hanging out. Glad you guys missed us. And we'll be off now. So have a great rest of your day. Go make some money. We'll see you guys on What the Fick. Have a good one.
Adios.
Bye, everybody.
Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then I